This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end of day update video, algorithmic day trading for ESNQ bonds and crude oil for Tuesday, February 11th. So yesterday was just a completely bizarre day. You could throw the math out the window. Nothing made sense yesterday. Usually when you get days like that, very quickly things will return to mathematical algorithmic trading, and that's what it did today. The left side of the screen is our swing trading algo. The right side of the screen is our day trading algo. We've got a variety of proprietary algorithmic pivots on the chart. For today's trading, we got short at 70. We're expecting a move up to 72. We got a little bit higher up to the 74.50. We entered short at 70 because you don't want to just blind fade these kinds of moves. You need confirmation before you can enter the trade. So we're in at 70. And what's amazing about our algorithmic system, everything that we do is based on a time price algorithm. It's not based on just a price algorithm, because price algorithms are not repeatable. They're just not precise. When you anchor an algorithm to time, you get this level of precision. So we're in at 70 short, and we trade in thirds. So when we get in a trade, once it starts working, we look for a spot to take the first third of profit out of the trade. Typically, you're looking for 4, but when it's a really choppy market like we've had lately, sometimes you take 2 or 3 out of that first third, and then you look for where to take your middle, which is the profit on the middle third of the position. After you take your middle, then we look for, or then at that point we just let the runner run. The runner is the last third of the trade, and that runner you give more room. Now, what's beautiful about our system is just how precise it was. Each morning, about 8 o'clock, we put out our algorithmic daily bull bear pivot. Today it was 33.55.93. Now, the algorithm is decimalized, so it doesn't give you 0.25, 0.50, 0.75, and then the round number. So that's why you see these algos with a 2-place decimal. I don't ever remember a day where ES did not at some point come in contact with the daily bull bear pivot. And today it traded way above it all day. I mean, the bull bear pivot's down here at 33.55. That bull bear pivot is a time price algo that we generated about 8 in the morning. It has nothing to do with where ES is trading at that point. It's simply a time price equation that we run, and every single day that is the single fulcrum pivot. That's something that used to be an add-on service. We provide that to subscribers with the ES and NQ algorithm now. But what I was mentioning, our subscribers, we have a live chart feed on Zoom. So they see this during the day along with about 6 other charts. And I'm on the mic all day long calling the tape, helping our traders get into trades, and calling out the best places to put profits. So when we started getting down into here, what I mentioned this afternoon was that there's never been a day since the time that I created this daily bull bear pivot that ES has not engaged that pivot. There's never been a day where it didn't come into contact with it. So even up in here, when this broke here at 65, we were looking for a move down into the daily bull bear pivot. Well, we got that. And we came down a little bit more, and it came down right to the tick to our midday pivot. Now, the midday pivot is run off a similar time cycle to what we run around 8 a.m. for the single daily bull bear pivot. This midday pivot comes out a little bit before 12:30 in the afternoon Eastern time. So that gives us 2 incredibly precise markers to trade off of. We also have what we call live pivots. Live pivots are pivots that we generate throughout the day, and I'll show you a couple of those in a minute. But these are generated at precise times. So here you have the afternoon live pivot, and there's 2 of them. We have 2 afternoon live pivots. This one shown with the white line was at 33.64.53. And then this other one right here is at 33.60.64. Those are generated a little after 2 o'clock. So when you go into the afternoon, you've got our midday pivot, which is released prior to 12:30 Eastern time. and then you've got our afternoon live pivots that come out a little bit after 2. I remember early in my trading career, I've been trading for over almost 35 years now, and there were so many days as an early trader where I would do well in the morning and then give it all back in the afternoon. And a lot of times I'd give it all back and then some. And for a lot of beginning traders, it can be very difficult at times trading that afternoon, because what happens in the afternoon is that's where the institutions are positioned into the end of the day. And that happens right after 2 o'clock. When these live pivots come out, every single day I can barely get the numbers out of my mouth, announce them to our subscribers on the live chart, and literally the minute I run those, the market starts moving. Why does that happen? Because these are the same algorithms that the banks, the institutions, the hedge funds trade off of. They are the same ones. And I guarantee you we have quite a few things that they don't, but the point is that when we come out with these afternoon live pivots, this one that was 33.64.53, and the other one that's at 33.60.64. As soon as those are available a little bit after 2, the market will start moving, because the institutional traders that are trading in size, they need to see those benchmark levels a little bit after 2 o'clock, because you have to run these at literally a precise minute. But they need to see what those levels are, and then as soon as those come out, then the market starts moving. But you had a move down to the tick to our midday pivot, and that was around 312, and this is a pivot that's generated around 1230. So you can see how precise that is. Now here's what that allows you to do. It allows you, for example, today when we were in a short position, that if it goes through the daily bull bear pivot, you know it's going to the next one. And when it broke the daily bull bear pivot at 55.93, where did it go? It went to the tick down to our midday pivot, and right below that is our X5 pivot. Now, even before it got here, I mentioned on the mic on our live chart that when it comes down into this X5 pivot, you need to take profits a handle and a half above, because the X5 pivot, which today was 33.51.33, that is where the institutional algos are programmed by the dip, always. Now, if they don't, then that's an important tell also. But imagine trading and being in a short from 33.70, being able to take profits in precisely into these pivots. I mean, the first move down came to our multi-day trend short cycle pivot, and that was a perfect place to take some profits. You get a bounce up, it fails, and where does it come down to? It comes down to the multi-day trend long cycle. So here's your multi-day trend short cycle pivot, came down into it, came back up, failed back test, and where does it come? To the tick. If you've been watching our videos, there's a phrase that I use almost every night, and that is to the tick. And when I make a statement to the effect of these are the institutional algorithms, we prove it every day. There is nothing that does this to the tick over and over all day long. So you came down here to the tick. You bounced off the multi-day trend long cycle pivot. Came up to our proprietary momentum algo, which is this cyan line. And then it came down, broke through the multi-day trend pivot, broke the daily algo bull bear pivot, and comes down exactly into the midday pivot, which happened to be right above the daily X5 pivot. Now, it's difficult to trade with the way the algos just move the market around in ways that sometimes make absolutely no sense. But if you've got these type of mathematical benchmarks to trade off of, it makes trading so much easier. Now, I will say this. There's days like yesterday that made absolutely no sense whatsoever. But again, when you have days like that, typically you will have very quickly a reversion back to the math. I mean, the math, these algorithms are the levels that ES wants to seek. Taking a look at bonds, let's go over here to a little bit bigger chart. By the way, one of our other algorithms is on this chart here. If you notice this white dashed line, and also notice this white solid line. On this chart, this white dashed line is a very fast-moving algo. It's sort of an early warning, early entry, heads up that something's about to change directions algo. And so down here, you see it coming basically horizontally, a little dip, and then it turns up. And not only did it turn up, but it crossed through the slower moving white algo. That's what got this thing started on Monday. You know, you had that move down Monday morning to 33.14-ish. And then you got this violent move back up, and that's when that algo turned. Now you can see the opposite is starting to happen right in here at 33.60. I mentioned our subscribers earlier this evening. 33.60 is the big deal. The reason that you're getting this kind of up and down in Globex is that they're fighting over this 33.60 level. Because if that 33.60 level, if we get sustained trade below it, then what you're going to get here is the opposite of what you had here. Now, if that breaks, then the levels you're looking for are right down here, this purple line, 51. And then if that breaks, then it starts opening up things lower. That is going to open up a move down into this regression line. These regression lines are time price algos also, but the only thing that we put on the chart that's not a horizontal fixed point in terms of pivots are these regression lines. So if they lose the battle here at 60, then you're liable to come right down into this regression line. Now it's got to break this first, but these regression lines have magnetism. You can see you came down right into it, and this was Friday, came down into this regression line, bounced up, came down into it again, fought over it, came down, came back up, broke again, and you can see these regression lines are one of the freakiest things that you'd ever want to see on a chart, because it's just a battle, back and forth, and then they'll release, then they'll come back and they'll fight over them again, back and forth, they'll release. And it's just, I mean, you could trade off nothing more than these regression lines, but it's amazing, just amazing to watch the price behavior at these. And this too is one of our proprietary algorithms. Everything that you see are algorithms that we created. None of this is borrowed, enhanced from any place else. These are all proprietary things that are built on our overall master time price cycles. So let's take a look at bonds. And we have two different packages. We've got an ESNQ package for day traders of the equity indexes, and we have a bonds crude oil package. So you get bonds and crude oil. But here too, you can see the precision. Down here we have one of our Mercury bands. These Mercury bands look back days, weeks, months, and where does it come down to? Exactly down into it. You had this move up here that went a little bit over this Mercury band long cycle at 62.19 and then failed, came back up again into the X5 pivot, came down, and here again to the tick, to our short cycle upper, and it's done that twice, to the tick, comes up here to within a couple of ticks. The X5 pivot breaks, it gives way again, and where does it come down to? To the tick, to the tick, to the tick. There is no bond algorithm that does that other than this, period. And the price of our systems, if you're wondering, for example, the ESNQ system, if you're trading the E-mini is $50 a handle. So the subscription rate is it's like 67, 68 bucks a week. It's a little over one handle. Same thing for the bonds, two separate subscriptions. And so when you've got this level of precision, to the tick, to the tick, to the tick, to the tick. I mean, is that worth a little over a handle a week? I'll let you decide. So bonds were just getting a little bit of a retracement. Bonds have been absolutely a beast. Yeah, I mean, this can come down a little bit more, and it's still not doing anything wrong. We've still got this Mercury band here at 61.27 that might get a look. But if you trade bonds, there is nothing that trades bonds as accurately as this. Crude oil. Now, crude oil is trying to put in a bottom here. It's trying really hard to maintain the $50 handle. But you can see the kind of movement today. What was interesting today is that we had the X5 pivot and the X4 pivot literally at the same price, $50.25. Okay, so you can see how binary that is. Above it, below it, above it, fails, comes up above it again, comes down to the tick, comes down to within, I'm saying to the tick, within a couple of cents, breaks it, and so, you know, it doesn't get any more accurate than this. You can see the effect of the midday pivot. Again, the midday pivot is put out right around 12:30, and again, it has nothing to do with price. The midday pivot isn't here because crude oil happened to be trading in that vicinity. It is a time price algorithm that has to be run at a specific minute, a little bit before 12:30. And so you get that move down, you get a move back up precisely to it, it comes back down. These purple dashes are an algorithm, and that holds. And now it's trying to maintain price over 50. And this is, I mean, it's really interesting what we're getting right around this $50 level. But here's the point. You've got a very choppy day here in crude oil. And, you know, people wonder, well, how do you trade chop? Well, if you don't have these type of precise pivots, you don't trade chop. But when you've got this level of precision, you can trade this because you know that these pivot levels are very binary. They come down to them and they either bounce or they break. And so, you know, you can trade this kind of chop if you have that level of precision. Now, what are we looking for the rest of the week? Today, Jay Powell gave his testimony, his Humphrey Hawkins testimony, and a bit of trivia. Humphrey Hawkins was co-sponsored by Senator Humphrey and Senator Paula Hawkins of Florida. That's an every 6-month testimony, and the way it works is Jay Powell, whoever happens to be the Fed chairman, testifies before the House and then the next day before the Senate. Now, as you can imagine, the equity markets tend to have a bid during those 2 days. So it's going to be interesting to see what happens on Thursday, since tomorrow, around 12:30 or so, should be the end of the testimony at the Senate. So tomorrow afternoon will be interesting. Thursday, I believe, is going to be very interesting. Quite a few cross currents. Globex is just whipping all over the place. And so if you're asking yourselves, well, how do you trade these markets when they're, you know, as choppy as you saw there with crude oil, or you're getting these crazy moves up and down in ES? Well, in my opinion, don't even try to trade these kind of choppy markets if we don't have an algorithm this accurate to give you precise benchmarks. And so, again, tonight, you know, the price they're fighting over is this 60 to 57 area, because one more time, going back to the algo we were looking at a minute ago, you're about to get this crossover here, and if you do, it's the mirror image opposite of what you had down here. And if this breaks, you know, I know a lot of you out there, you know, you want to buy every dip, but this is one of the most dangerous setups for ES that I have ever seen. And so, yeah, can this go higher? Sure can. But we can also go down and visit low 3200s pretty quickly. 3200, I'm not saying 3200 on the nose, but this overall structure where you had this move up to 3300, 33, 37, that came down hard to 3300, came back up, failed, came back up. What you've got here, you had a broadening top here. 100 handle move down into potentially another broadening top here. Some people call it a megaphone, broadening top, whatever. This is one of the, this is the most dangerous structure I have ever seen in 35 years. You could get a very fast move down very quickly. You know, we can get a fast move up very quickly too. So, you know, you can trade long, you can trade short. If you have good risk management, you can trade any side of the market you want. And for those of you that are newer traders, let me just say this in closing. The single most important thing in trading is risk management. There is nothing more important. You can be long and make money, you can be short and make money, but you know, if you have good risk management. But I don't care what side of the tape you're trading. If you don't understand risk management in futures, you're going to blow out your account, you're going to have to recapitalize it. And let me just give you one example of that. How many novice or beginning futures traders do you know that if you ask them, you know, what kind of position sizing do they use? Well, position sizing is however many contracts the broker will allow them to put on based on their broker's margin requirement. That's not the way you trade futures. Professional futures traders only risk a very small portion of their account percentage-wise on any given trade. And so if you're trading futures that have leverage inherently, and you're trading on margin, which adds even more leverage, and you're trading the max your broker will let you, you will eventually blow up your account. I guarantee it. Don't know how long it'll take, but you'll blow up your account. And I want to give you an analogy. Imagine you owned a retail business. Your inventory is your lifeblood. If you owned a retail business, would you ever put your entire inventory at risk at one time? Flip a coin, whatever metric you want, but would you ever put your entire inventory of a retail store at risk at one time? It'd be crazy. Because if you're wrong, then you have to figure out a way to recapitalize your business. Well, when you're a trader, the cash that's in your account, that is your inventory. And you don't risk 100% of your inventory. Because the fact of the matter is, on leverage, you know, you can wipe that out in no time. So if you're a new trader and you're looking to trade futures and you want to learn, we'll teach you. And if you want to avoid a lot of the mistakes that beginning traders make, we'll tell you the mistakes not to make, because I've made them all, and I've made every one of them probably 100 times. So whether, if you never ever even consider subscribing to one of our services, we're going to be talking a lot about risk management going forward, because if you never become a member of anything that we do, if you're trading futures, you need to understand risk management, because there is nothing more important than that. And we will teach that to you. We talk about it every day. That's the thing that we predominantly talk about in our channel every day. So that's going to be it for tonight. Normally I have our website address on the screen. It's mercurysignals.com. Mercury, M-E-R-C-U-R-Y, Mercury Signals, S-I-G-N-A-L-S, mercurysignals.com. We're running a special right now, 62% off the regular rates on either the ESNQ package or the Bonds crude oil package. If you're trading futures, please be careful. Please watch your risk. Please never put at risk more than just a small portion of your account at any time. We thank you so much for being here tonight. God bless you. God bless your family. And we'll see you again soon.